Hi, welcome to this episode of FINTRAIL's FinCrime Spotlight. My name is Ciara. I'm joined today by James and Maya. So today we're going to discuss the EBA's, the European Banking Authority's report that they published last week on the money laundering and terrorist financing risks associated with EU payment institutions. So in short, the payment firms are not doing enough to manage their money laundering terrorist financing risks, and the regulation and oversight of them across the EU is not robust enough. I think the report goes into some of the control issues that are present or across payment institutions, despite of the perceived high inherent risk across the sector. It does recognise that this level of risk will differ depending on the type of payment institution. So, for example, if you're an AISP versus an MSB, and therefore you'll face different inherent risks. However, broad brush, I think there's a lot more that the EBA is expecting that should be done to manage these risks, both at payment institution level and supervisory level. So James, I'll come to you first. The EBA calls out key reasons driving this high inherent risks for the sector. Probably worth touching on these briefly. And importantly, are they telling us anything new from these?
I guess spoiler alert, it's a no. I think we spoke a little bit internally in the office and on internal comms at FINTRAIL that potentially this is I want to be respectful because obviously the EBA usually put out really good stuff, but it seems a bit of a lazy report. I think, they very much cover the, I guess the, ACAM style ICA education channels of risk within here, I'd say. So obviously talking about high risk geographies, high risk individuals, product services, channel risk, and within those, the general generic kind of risks you'd expect to see across the board with any financial institution, with not really any uniqueness to payment institutions set here at all, I'd say.
Yeah, I think like the fact that it calls out certain things like the nature of business in terms of channel risk, face-to-face onboarding or non-face-to-face onboarding is predominantly the business model for a lot of these firms. So therefore that risk is going to be present regardless of the type of products and services they offer. I think then within that though, Maya, the report calls out what the EBA believes that firms are doing sort of inadequately or managing this risk inadequately. Do you want to maybe touch on some of the key things that they call out for firms to be considering?
Yep. So it talks about them being quite generically high risk, but it then says that the payment institutions themselves have a poor overall awareness of their money laundering and terrorist financing risks. So while risk assessments have improved slightly in the last 3 years since the EBA last assessed this, it remains a significant concern. They still don't think they're good enough and that payment institutions are doing a good enough job of risk assessment. It says transaction monitoring is insufficient. It says the systems are either deficient or in some cases not in place at all, which would be quite a startling finding if there's just zero transaction monitoring. Insufficient suspicious transaction reports, poor governance, and it mentions poor governance particularly as firms scale. It talks about training for agents. This is one of the specific risks it does call out, is the use of agent networks to provide products and services. So it talks about firms which are not regulated and are not necessarily financial institutions primarily, so like news agents, for instance, that are the points of sale, points of contact for customers. And it talks about firms managing those risks very poorly. It talks about poor training of agents. So that's one of the specific areas that it calls out. And yeah, also, as you say, remote or online onboarding without appropriate safeguards, which is a weird one because I thought we had settled this debate, and there's been more positive messages recently from virtually everybody else saying that if you do it properly, digital onboarding is not higher risk than face-to-face. But I guess maybe it's not that well expressed here, but maybe the EBA's point is that they are not doing it in an appropriate manner and therefore it is still riskier. But yeah, that's the issue with remote onboarding.
Yeah, and I think there's a good chart within the report that calls out sort of where they're seeing the prevalence of the nature of some of the potential control failures, and the ongoing transaction monitoring space is certainly seems to be a key area where significant issues are being identified.
Yeah, and it also mentions that the issue sometimes is that the payment institutions are kind of relying on their partner banks to do transaction monitoring and ongoing monitoring, and so to pick up issues that emerge over the course of a relationship, which is a case of poor governance, like non-clearly defined roles and responsibilities as to who is doing that ongoing monitoring, and that maybe the payment institution shouldn't be putting this reliance on the partner banks. They should be doing proper transaction monitoring themselves.
And I think then, James, like if you look at the report talks about some emerging risks within the sector, and I think leaving sort of further assessment needed by the EBA to understand the impact of them. Like, do you want to maybe touch on these? And is there anything missing from the report as well that you think should have been included potentially?
Sure. Yeah, I was just to follow up on what we were talking about on remote onboarding and digital onboarding. I think there does seem to be a bit of a mixed message on that compared to like FATF as well, who basically the blanket statement is remote onboarding is not high risk now. It is just different. So you need to do different measures. Whereas this seems to kind of backtrack to the 1990s or something, where ultimately they're saying it is a high risk channel, which clearly is not necessarily the case, obviously. Yeah. So I guess another point I was just going to make as well, while I'm going off piste, is there's a Brexit paragraph as well. So blaming Brexit to a certain degree on the influx of payment institutions and poor payment institutions, which I think is probably a fair comment. Obviously, Brexit created a whole new need for passporting throughout Europe, and obviously, whilst the UK was reasonably well catered from a supervisory authority perspective to manage that, I think other member states were probably not able to supervise them in a proportionate manner as maybe the UK was able to. So I think that was quite interesting as well. But I think that was dragged and dropped from another report they did previously anyway. But going back to your actual question, sorry. So there is some interesting ones here, which I wouldn't say they are new necessarily, but maybe they haven't been articulated in a formal manner before, so quite useful to kind of have a look at them in themselves. So we had the white labeling, so which is almost a different labeling in itself for basically banking as a service, embedded finance, or whatever we're calling it now. So this is obviously not a new risk, but is something we're becoming more aware of. So definitely worth mentioning, especially kind of passporting with embedded finance or kind of banking as a service or correspondent banking, which is normal throughout Europe anyway. Third-party acquiring risks, so that's definitely a new one that I've not seen reference in any of these reports before. So the management of how people acquire funds from merchants using intermediary acquirers rather than directly from their own PSP. And then finally, not finally, but it was the one in the middle that I was meant to make in the first place, is virtual IBANs. So they're very much linked to, I guess, the white labeling of services. Virtual IBANs are nothing new, but I think definitely there's a wider spread use of it, given payment institutions rely heavily on banking infrastructure, and those virtual IBANs are something they heavily rely on, and I've definitely seen those kind of areas of risk not been managed appropriately by the partner bank or the actual kind of payment institution themselves. So some useful things to be aware of there.
Yeah, and I think like we chatted about earlier about some of the themes that were perhaps missing from this report as well that we've seen around things like the Dear CEO letter in the UK. Do you want to maybe sort of you were chatting about fraud when we were speaking on this?
Yes, definitely. So I did a quick Control F or whatever it's called these days on the word fraud, and it is mentioned once in the acquiring piece. So given that general mood is that fraud is a pandemic across Europe currently and the world, it was a bit surprising as a threat. It's still not covered, but I guess if we're purely talking AML legislation and TFL legislation and sanction legislation, clearly this identifies the hole that the UK is, I guess, trying to fill in terms of marrying those two kind of regulatory areas and risks together. So But yeah, potentially fraud is somewhere there's clear gap, especially with payment institutions where, general mood is that they're acknowledging that as an area that they're not doing very well.
Yeah, and I think that dovetails quite well into the ongoing monitoring, transaction monitoring controls around sort of keeping a close eye on transaction behaviours, etc., to identify trends that you're seeing across money laundering and also from a fraud perspective too. And I think your Brexit point is a good one to call out around sort of some of the passporting issues that's probably happened across Europe now as payment institutions are looking to have the licensing there. The report was pretty scathing to some respects on some of the member states' supervisory efforts in respect of the sector, and I think that probably sets the scene for probably some of the expectations of payment institutions, and it sort of marries into this passporting issue. Do you want to maybe call out some of the key things there?
Yeah, so the report does not identify any specific member states or supervisors, but overall it says that not all of them are currently doing enough to supervise the sector effectively. So it says that more than 2/3 of them identify the payment sector as posing significant or very significant money laundering or terrorist financing risks, but then they don't supervise it properly to reflect that. And it does also say that national risk assessments, a lot of them are either insufficiently detailed or horribly out of date. So there's a sort of generic understanding that it's high risk, but there isn't actually a detailed understanding as to how that manifests or a good plan for how to then supervise in response. And one of the things it calls out is the fact that there are these uneven standards across the EU. So different requirements apply and supervisory efforts are more robust in some countries than others, which leads to jurisdictional arbitrage, for the technical term. So a firm will choose the least robust country to incorporate in and then passport its services across the rest of Europe. So firms are deliberately choosing the easiest place to incorporate and to gain a license. So they're playing the countries off against each other, which highlights this need for member states to have like a unified approach so that firms can't do that. And it talks about the authorization process, and the degree of scrutiny is different across different states. The EBA has previously set out documents and requirements that should be looked at as part of the authorization process, and it says that isn't happening in all jurisdictions. Some jurisdictions look at the competence of the money laundering reporting officer or the equivalent, others don't. In the Brexit paragraph, I think it says some firms were granted licenses, but with conditions, but those conditions have still not been met. So they were told, like, okay, you can have a license, but you need to improve X, Y, and Z. They haven't done it, and there hasn't been any follow-up. So yeah, that inconsistency and relatively lax authorization processes are a problem. And ultimately, some of this is like a policy level as to what is required, what isn't. And then in terms of enforcement, it talks about the perennial problem for everybody about resourcing and how there's a trade-off with the inspection of payment institutions versus other sectors. So this is identified as high risk in theory, and yet there are not sufficient on-site or really, really detailed off-site visits to make up for the fact that this is a high-risk sector. And there isn't a proper risk assessment within the payment institution sector so that the highest risk payment institutions are reviewed more thoroughly. And it points out even when there is some attempt at that, it means that some PIs are just not regulate, like there aren't on-site visits. They can get away without being monitored for really, really long periods of time. So there isn't a proper risk assessment approach to the actual ongoing supervision of any of this. And again, there's no common approach to supervising agents or payment institutions with large agent networks. So again, that agent risk.
Yeah, I think sort of the agents piece is certainly very prevalent throughout the report as well too. And it'd be interesting to see how individual member states will potentially respond to this as well. I think, James, to maybe bring us to a close, like what do you think it will mean for payment institutions in Europe? And are there things that payment institutions can do to get ahead of potentially any response that member states will take?
So obviously there's a long-awaited AMLA, which is coming to a town near you one day soon in the next 5 years or something, with an output of some sorts. But I think the projections are like 3 years now. So I think clearly that's going to have quite a big effect, having more of an authority with, who who has their singular kind of job is to kind of have oversight on this will be helpful. Single rule book attached to that is going to be interesting because, as Maya was talking about in relation to the arbitrage of going through different licenses, let's all avoid Germany. Clearly those single rules are going to be more closely aligned. And I think the other one, which the other report that the EBA released a few weeks ago, which was their 2022 annual report and 2023 look forward, there was a good summary on Eureka as well. So that is the naughty list in Europe. I think, clearly not having this, not keeping on top of these things may result in you being reported to that naughty list or Eureka. I think just to summarise from that report, they had, I think they had 259 material weaknesses reported and 15 reason requests for information on that specific database last year or something. So I think that's definitely an area where people want to kind of stay off of. But yeah, I guess in terms of how people can, stay on top of it, make sure you've got proper assurance on your program, making sure your kind of your controls are effective going into kind of any kind of new markets or the existing market that you're supervising as well. So, if you need some help on a thematic assurance or you need some assistance on audits, you know where we are.
Yeah. Brilliant. Well, thank you. I think it's definitely worth a read. It isn't anything shockingly new as such, and there is potential some room for confusion within the report around messaging regarding remote onboarding, etc. But I think, broadly speaking, as you say, sort of the need for firms to ensure their controls are robust enough for the risks that they face is important. So yeah, worth a read. And thanks both for your time today and covering it off.